Alright guys, welcome back to the LPR Trading YouTube channel. I've got another order flow video for you guys here today. We took a trade in the morning with a very small stop on this, but there was a really good reason for taking this trade. We ended up identifying an area on the chart where there was what we thought was a whale, and it was. A whale being a fund, an individual, multiple people with large orders stacked at a single level that we thought could have absorbed price action and pushed the markets higher. Now, why I like taking these trades is because the risk versus reward is very good on these trades. And what do I mean by that? Well, if we can get, for example, a 2 to a 3 tick stop on the market, even if we're wrong and we slipped out an additional 2 to 3 ticks, we're losing 4 to 6 ticks on this play, where the upside of this turns out to be 20, 24, 30, essentially unlimited amount of ticks. If we nail the bottom on this play, and this is actually the absorption play going into the day, we could nail high of day or low of day straight off the open and catch a really good trend for the remaining part of the day. So what I want to do is, I've got a video here in the back, and I want to play this, and I'm going to show you guys and talk you guys through what we saw in the chat room and how we executed this trade. Again, we did stop out of the trade, totally fine. We can't win these trades every single time. We can't win every trade every single time. We're going to have losers. We just have to put ourselves in these high probability situations that in the long run will pay us. So what we saw here, I have the start of this video. This is the market right here, ES, and this is the pre-market that we see in this gray area. So in the pre-market, we noticed that we found a bottom here on ES and we started rallying into the open. Let me change this color. We found a bottom here at ES and we started rallying into the open. Now, at the open, the POC or point of control was right here at 4444. What we did notice was there was a large buyer or a whale, an elephant, whatever you want to call it, at 4440. Represented by this line right here, 4440. Every time price came down, he did not spoof his order and leave. Spoofing an order is putting an order in the market like this guy right here, and when price action comes close, the order gets pulled from the market. It's like a no intention to fill order. This guy was definitely trying to get filled. So what we did here is I was front running his large order with small size, because on these trades we want to be in small. If we nail the trade, we can always add later, but we don't want to risk full size on this trade. And if we end up getting stopped out, we slip out, 2, 3, 4 ticks maybe, and it's just a catastrophic loss. We don't want to end up in that scenario. We're dabbling here to see if this elephant or this whale can hold price at this 4440. So what I'm going to do is I'm going to play this video out and I'm going to let it play itself out, and I'll fast forward going through as we get closer to price, just so you can see exactly what we're seeing. Now, as you can see off the open here, if you look at the chart as well as the price, we're pushing very far away from this 4440. But I know that if I want to get long, I want to get long off of this large buyer. So we sit there patiently with our order. As you can see, our order is still down here. We're front running the 4440. We fast forward a bit to get price closer to our order. Fast forward a bit more. Okay, here we go. As you can see, as we're getting closer to the order, we're getting closer to this 4440. I have a limit buy here at 4425 and a stop order at 443975. So I've got a 2 tick stop on this play, and we're purely playing the depth here. We're playing the depth with this pre-market low hold. So this is where that large order is. He propped price here. We're trying to see if he can prop price again and push price to the upside. So this represents price getting closer to this 4440 area. You can see by these blue colors, this means there's large orders sitting in this area. But when price got close, you see how these areas went dark blue? That means that they pulled their orders. So all of the orders for these 3 ticks, 4 ticks, point essentially, these are all spoofed orders. No intention to fill. Okay? These are people trying to manipulate the market one way or another. Could be to the upside, could be to the downside, but they're putting orders into the market, large orders, to try and influence the market and market participants into a certain direction. Now, with the depth, we can see these guys pushing in their orders and pulling out their orders, so they don't fool us at all. It's just nice to know that they're there. We'll let this play out here, and I actually think we get a rip back to the upside again. We do. Price pushes up. And this is when price starts coming back down. Now we're getting closer into our order here. And as you can see, when we get really close to this order, you see these no intention to fill orders, they're leaving. Once you get this darker blue color, at least the way I have it set up here on Jigsaw, once you get this darker blue color, these are the orders leaving the market. The dark blue represents the least amount of orders, okay? The light blue represents the most amount of orders or contracts on that price. Let's play this out right here because it gets really interesting once we get to price. You can see every time price pushes away from this area, these orders come back and they try and influence the market. When price pushes back into this area, the orders leave because they don't have an intention to get filled. We can see this guy sitting down here at 4440, 301 on the bid. Perfect. That's good size. We get a push away again. These chumps come back in and try and influence the market. We already know they're fake at this point. They don't have an intention to fill. It could be this guy spreading out his orders in this area, and once it gets closer, he just sucks them all back into that 4440 price. That's also a possibility. Not likely though. Fast forward on this a little bit. We get a nice push up, and now we start coming back into price. I want to get to the area here where we actually tag that 4440, okay? So we'll leave it here. We'll let this play out just like this. Okay, as we start getting closer to 4440, we have bid pressure right here. We got 152 on the bid. This is at the market on the bid. So we do have pressure on the bid. We got a 202 on the bid. A couple buyers stepping in here on the ask at market. And we can see by this column here, this is telling us that there are sellers refreshing the ask for 220 contracts. These are bids refreshing the bid for 177 contracts. Well, let this play out. I really want this to get into our price so we can see what is happening here. So we got filled on this trade, okay? We got filled with a lot of pressure on the bid. 341 by 61, 187 by 30. Or 31. This is an imbalance to the sell side, right? So this is exactly what I was expecting. An imbalance to the sell side. We'd never tagged this 4440. If we did, I would expect him to prop price and shoot price back up. So let's see what happens. And again, we lost this trade, so it did not do what we were expecting it to do. But I would take this trade over and over and over again just for the simple reward on the top side. Pause. Perfect. We get into our 4440. Look what happens here. 574 contracts right away, market at the bid. Now this big guy right here, he's reloading or adding 281 contracts. This big hit on the bid chipped him down to 35 contracts, but he's willing to reload. The issue here is the sellers are also willing to reload on the top side, okay? Or the ask is willing to reload. I shouldn't say the sellers. The ask is willing to reload as well. And the bid is getting a lot of pressure from the sellers at market. That's 574 contracts by 0 contracts hitting the market on the ask. That means there's no upside pressure on the buy side. We fast forward a bit more and look at our tape. Our tape just gets painted red. These are people hitting price at or below the bid. And in this case, below the bid. When price ticks up to 44425, this is when people are hitting below the bid. And this is a lot of pressure. You can see 704 here on the bid, but our guy here, our whale, is still reloading 434 contracts. As I said, it might be a fund, it might be a single guy, it might be multiple people loading in at this price, but this is what's happening at this price, okay? Now, this is a lot of pressure here. Realistically, we could have bailed when we saw this pressure. We only have a 1-tick stop though. We did slip out for about 2 ticks. Sorry, we have a 2-tick stop and we slipped out for an additional 2 ticks, but we're letting this trade play out because it's such a low risk, high reward trade. I mean, if this was our entry and this was our stop, even if we just got back to the open price, we'd make 1, 2, 3, 4, 5, 6R, just getting back to the open price. Okay, and this is literally barely a move in the grand scheme of things. If we're looking at the chart, ES could have held this low, popped up, and broke high of day. Now in this case, this is a huge trade. Not that we're going to hold the whole thing, but this turns into a huge trade. So what I'm trying to say is I'm willing to risk the biscuit in this case, okay? I'm willing to get in front of this whale, hoping that he has enough money in his pockets to hold up all these sellers. In this case, he didn't, and we'll let it play out. We can still see there was a lot of pressure here, and he comes back, and now he's got 121 contracts still here, freshly loaded, passive on the bid. So this was looking promising. He's growing, 143. He continues to add contracts, or maybe multiple people are adding contracts here. The problem is once the sellers come back down into this area, look, he's loading up another 142. The sellers are applying a lot of pressure, 242, and they're aggressively hitting the bid here. Look at how red this tape is. I'm surprised he held this up for this long, but this is so amazing to see this in action. Essentially, when you look at something like this, it's like opening up the hood of a car. You know why it runs, and you know what's under the hood, what's making this car move, right? This is exactly what we're seeing here. We're not just simply seeing candles and volume move around on a chart. We're seeing the actual actions and transactions, the cause and the effect of price action, and the exchange of contracts in these situations at an exact price or at a given price area. So let's play this out for a bit more. Look at how red we're printing on this tape. Like, I can't believe he's holding this up for so long. Now we're 371. He's adding another 304. He has 77 left. And boom, he gets exhausted. I think what ended up happening there is either someone pounded the bid really hard and took everything he was adding, or he gave up and he pulled the rest of his contracts off the bid. Okay, something like that happens really fast, and there's not much you can do about it as a retail trader. I don't think anyone could react to that really. And if you did react to it, you wouldn't be getting fills anyways, because there was no available fills at the prices that you wanted to get out. If you market it out, you're getting filled somewhere down in this area. Anyways, I thought that was a great little opportunity to explain to you guys how these areas work, how Jigsaw works, how the depth works, how the Auction Vista works, and how we can see where these big buyers or sellers are situated. Because what the market does is it moves from one liquidity zone to another, and it just bounces back and forth in ranges. Even when the market's trending, it's moving from high liquidity zone to high liquidity zone. That's how it's pushing its way up. Buyers are just stepping up to price, and sellers are moving away from price. This is what causes these trending markets. Now, when we're in a sideways type market or a consolidation phase, accumulation, distribution, the ranges are tighter. Buyers and sellers are in a tighter range, and they're not willing to spread this range apart in order to create a trending market for that given moment. So this is a super powerful tool. We saw this all live in the chat this morning on Jigsaw. I do use this. This is my setup here that you're seeing. I love this tool. I think it's a great addition to anyone's trading arsenal. It doesn't matter how you trade. I would say for a swing trader or something like that, this is less effective. But if you're a day trader, not even just a scalper, a day trader, and you want to be in trades and out of trades on the same day, I think this is worth your investment. Like I said, I use it. Many other members in the chat are using it now. If you want to check out any of our information, or you have any questions about Jigsaw, our chat room, anything, please like, comment, subscribe, leave a comment down below. I will definitely get back to any of your questions. I'll also leave coupon codes or discount codes for Jigsaw down in the description and in the first pinned comment, just in case you guys are interested. Until next time, we'll see you guys on the charts.